So how did I make $200 trading NVIDIA call options? So looking at NVIDIA yesterday at 1425. $14.25. Let's see. No, I mean the 8th. So July 8th, 1425. July 8th, 1425. So this candle right here. So what I did, I played NVIDIA call options as soon as it landed on the 20-day moving average, waited for a bounce, and then at 1442 I sold out the position, and that's basically how I made $200 trading NVIDIA call options. So pretty much on the next candle, which would be, let's see, this candle right here, the 15 candle, is when I sold out the position. And basically once I saw that my position was up 6%, I basically just sold out the position and just secured the $200 gain. And pretty much what you're trying to do essentially is let's do like a little walkthrough. So this is how you could do it yourself. So what you do is you go on this free website called finviz.com. You go where it says screener, click on where it says market cap, highly suggest this for beginners, not financial advice, but click on where it says performance, click on where it says perf YTD, come on, and it's going to show you a list of stocks from worst to best. And essentially what you're trying to do is you're going to create basically your lines of support or resistance using the daily chart. So let's say you're a beginner, right? This is how I would do it if I was a beginner. Let's see if we can use, let's do Tesla, right? Let's do Tesla. So what I would do is I would map out my lines of resistance and support. So let's say for me personally, I see support for Tesla being this area. So that's the support. And the resistance, wait, where is it? And then resistance, wait, can I not duplicate this? Can I not duplicate it? Hold on. I don't think it can let me duplicate. I could be wrong. Hold on. Let me see. Oh yeah, okay, I just needed to press on the chart again. So basically for me, my resistance area would be this right here. So essentially for me, what I would do is I'm gonna try to see if Tesla can get rejected by the 9-day moving average, and if it does manage to get rejected by the 9-day moving average, I'm gonna patiently wait for Tesla to approach this support level of 293 or 294. Let's put it that way. Now my next step would be to basically map out my selling point, so my exit point. Basically this resistance line right here would be where it says, let's see, what does it say or read? 333. So let's put it 332 through 333. That would basically be my exit points that I would need to sell out the position out of, so that way I can secure the bag. Basically what I would do is I would play leap options. As soon as Tesla approaches this support level around 293 or 294, basically my call options, I would buy them to expire in either 6 months or 3 months out. Typically, if I'm playing leap options, I typically try to play options that expire in at least 6 months or in a year out. Typically, I'll try to buy options that expire in a year and a half, but typically I'll stick to trading options that expire in 6 months or in a year. And basically, once Tesla lands on this support level of 293 or 294, I'll wait for the bounce. Once the bounce happens, I'll basically sell out this resistance level of 332 or 330. Yeah, 332. Let's put it that way. I'll sell out the position once Tesla reaches that resistance level of 332. And basically, this is probably the easiest way of how anyone can play really options. And so typically, when you're playing options, you do need to have like a lot of money, honestly. Now if you're trading, let's say you don't have a lot of money, because when you're playing leap options, you need to have a lot of money, honestly. The reason is because the further out these options that you buy out that expire in 6 months or in a year, they're more expensive. Now if you buy options that expire in, I don't know, maybe in a month or less than a month, they're typically cheaper. So let's say your account is like somewhat small, right, but you're not trying to risk a lot of money. Here's another way that you could do it. So on the 30-minute time chart, let's see if we can use Tesla as an opportunity or not. Okay, so this is how I would have played Tesla, right? So I see the 9-day moving average is currently above all of these other moving averages. To me, that implies that we could see more further uptrend from Tesla. So I would buy Tesla call options as soon as it lands on that 9-day moving average, right? So I'll let Tesla do its thing, do whatever it needs to do, right? And I'll patiently wait for Tesla to land on the 9-day moving average. Now all of a sudden we're below the 9-day moving average. What's next, right? So typically what will happen is your position is down either at most if you're trading options that expire in less than a month. Typically when you're day trading options, they go down as much as either 10 or 15%. Now basically what I'll do is, I see Tesla somewhat approaching the 20-day moving average. I'll buy a couple of more Tesla call options since it's close to the 20-day moving average, and basically I'll try to dollar cost average basically. And essentially when Tesla does decide to rebound and regain control of that 9-day moving average throughout the day, my position will be in the green a lot more faster. So typically what you're trying to do is, let's say it broke the 9-day moving average here, no need to worry. As long as Tesla somewhat lands on the 20-day moving average or gets close to the 20-day moving average, you can dollar cost average. So basically buy more Tesla call options. That way, in case Tesla does decide to regain that 9-day moving average throughout the day, which in this case it did, your position can be in the green a lot more faster than if you were just to leave it alone. If you had just only bought Tesla call options here only when it landed on the 9-day moving average. So that's another way how you could try to play options if you have like a smaller account with not so much money. So also another way to manage your risk is by if you see that the trend changes all of a sudden, typically for me, what I try to do if I see that happen, I'll try to take a maximum loss of 10%, try to move on to the next trade, and for the next trade I'll try to aim for a 20% profit target instead now, so that way I can recoup that previous 10% loss. So that is pretty much it. Those are basically two ways of how you could, trade options essentially. And yeah, that's pretty much it. This is not financial advice. As always, take care and bye.